The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 27th of March, and we're looking at the 10-minute E-mini chart. Kept using this 200-period moving average as a repellent and a propellant, and then suddenly it breaks out and goes to a high today of 5294.50. That was a peak E in the 10-minute chart in Chapman wave methodology, and then it came tumbling down. It was a peak F right at that high, 5294.50. It retested it just underneath it, and that failed. This is going to be very important because within the context of, let me get to this, the markets, you've got certain areas like gold. The GDX is moving up 0.67. So a question came in from a subscriber saying, so why didn't, if it was at a peak C, why weren't you expecting a peak D and go along the GDX? And one of the reasons is, while I like the action of gold, and gold right now has come back after a very sharp move up and then a very deep pullback earlier on. It's walking the 9-period moving average. It's up 13 at 2213.1. But this is what I'm looking at. We've got a leg D in the weekly chart of gold. It's gone above the inside track repellent zone. Oh, I have to move this up because every month, because it's a continuous contract, it gets smoothed out, so I have to change where the notation is. And it's just above that inside track repellent zone. And the same thing for the monthly chart. So I'm anticipating that gold basically goes into a kind of a trading sideways band. And one of the reasons why I say that, look, silver, which is up a little bit today, has made a peak D in the daily chart. It couldn't break sharply and hold into the Chapman wave inside track repellent zone in the weekly chart. Monthly chart doesn't look too good. So that in the overall spectrum of looking at the commodity of gold, where you always add silver, gold is a leader, but silver needs to follow to say that this is a signal that isn't more like a geopolitical, economic aspect. Because if you're looking at the gold miners, this is good action, but it's not great action. They should be leading. They're following. So I was anticipating that there'd be a move up. We get a big test of this weekly chart, inside track. Then there could be a pullback, and it's the next pullback that I think will offer the chance for a much bigger move in gold, because I want to see silver moving up. I want to see the dollar, which right now, the dollar is trading up 14 ticks, almost getting to its own leg D, underneath the previous peak at about 105, where it started to pull back to under 102. So this is very good action, but it might be getting to a D underneath the previous, and that'll say, and then I can watch to see whether or not the dollar starts to break down, and then gold really starts a bigger move. If the dollar continues pushing up like this, and you remember, I like to, for about a year and a half now, I've been talking about those 5 icons that I always look at. Bondy for bonds, Crudy for crude oil, Dolly for the dollar, Goldie for gold, and VIXY for the volatility index, how the relationship, just the normal relationships that we had seen for decades, where the dollar moves up, gold pulls back, oil pulls back, just that type of thing, where yields move lower, bonds go up, and that usually helps the market. None of those relationships are really, they're active momentarily, but they're not the relationship isn't the same as it had always been. Okay. So with that said, we did have a gold stock. We got stopped out of the gold stock because I had a very tight stop. Now it's moving quite nicely. And even there it's moving, but it isn't hardly any of some of the gold stocks, but not the general consensus of gold stocks or silver stocks are moving like you would expect in this environment. So I'm anticipating this is more geopolitical, but the actual move to the upside could come a little later. And that's where I think you get a much stronger move in gold, and that'll be for reasons that include the metals, that'll include silver. Now, I don't know about platinum, and if you want to go into areas like that. So we've got platinum made of, the platinum looks ugly. This weekly chart, I haven't looked at what's the palladium and platinum. So this is platinum, PALL. PALL, is it? Oh, yep, there it is. And palladium this is not very good at all. Look at those weekly and daily weekly and monthly charts. Not very good. So it's kind of a special thing. Now, what's really important is the SMHs. You can do as much as you want. You can talk as much as you want. As far as I'm concerned, the general market trend is led by the semiconductors. Sometimes it follows, but most of the time it leads. And the high that was made at 239.14 on the 8th of March, I'm anticipating there's a technique that I discussed. If you go to any of my webinars, especially the last webinar that I did, this pattern right here, what I call the dreaded H, this is a valid pattern. You've got a sharp move down. You had a rally that went to a peak A, failed, took out the left side low, and then you had the one-to-one to the downside. And then you had a rally in the semiconductors right into, and I kept it for a reason, the Chapman Wave inside track repellent zone, where it broke out of, but that's still valid until you take out this low here. And at any point in the first week, I'd put it in the first week of April, if the low of 212.82, let's call it 212, is taken out. Doesn't have to, I prefer to say on a closing basis, but it doesn't have to be. I'm saying to you that there's, for my analysis, there's a real good chance that we're starting an April consolidation in the general market. If for whatever reason this inside track, which is a rising inside track, sees the SMHs, they don't even have to close there. They just have to touch the 230, oh man, in the middle of that bar, 231.41 level. It's 230.40, 231.40, there you are, 231.40, and then we start to go all the way back to the highs that we made at 239.14. So this to me is a very, and I should say for clarification, that we are short the SMHs. Now, let's just go to the areas that I was looking at a moment ago. The TLT, nice move to the upside, up 22 cents. Nice move. It's just a fractional move, but it's nice that it's giving the 9-period moving average right here, the pink 9-period moving average, a chance to move over the black 14-period moving average, and that'll be a good sign for that particular technical tool. The MACD is unchanged right now. If that histogram, that 0% line, can see a plus, that'll be important. And the stochastic is lousy at 34%, but it is rallying. And the on balance is also very weak. But that's the way I'd be looking at this. And you can see that inside track repellent zone right there. I'll be back in a moment. Dow's up 263, S&P's up 16. Basil Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. I had a question about Merck and Company, Big Pharma, leg G/C in the monthly chart, all-time high, leg D in the weekly chart. We were waiting for that D. I was looking at it. I didn't know whether this is a position that I'd like to take close to all-time highs. Kind of tough. And then what happened? There must have been news today because it just gapped up and it went to 133.10, way above the 130-ish high that was made back in February. But now it's pulled back. So it was 133.10 right now, 130.47. I've got this as an F/B. This is one of my, the reason why I liked it, I didn't draw this in because I wasn't really interested in buying it at this level, is that this pattern here, this kind of very narrow channel that comes down, very often pops to the upside, takes out the left side, the last left side high, then you can start to see it go towards other highs. This one just did it all in one quick shot. So, yeah, so that's Merck, very good action. And, of course, some of these, like Eli Lilly, Merck, they've all got, drugs that are just, they are the drugs du jour. That's absolutely for sure. Now what I'm looking at is Eli Lilly just had an inside buy signal to buy mode, had a couple of round numbers, and that's what I was saying the other day. But I'm not just seeing round numbers in these tech sector and semiconductor stocks. They're all over the show. Look at this. Berkshire Hathaway, come on. Berkshire Hathaway is an all-time high at, whoops, where did it go? At 422. Let me just put that down here so you can see it. 430.00 was the round number all-time high. Well, 422 was that day's open. Then it did a Chapman wave inverted Roman candle at a high, and that just says if you start to close underneath the low, that says there's a good chance you're going to make lower lows at some point. And within 2 sessions, if you close halfway into the wick, which is at about 425.80, then there's a chance you retest the high when you haven't done that. But now you're having a little bit of a balance, and inside peak A, peak B, peak B, peak C, and we're trying for a D. But even here, it looks very much like this could turn around in April and become a dreaded H. That's what I'm looking at here. All right, that is Eli Lilly. So another question came up about the CME, that is the Chicago Board of Exchange, leg F in the weekly chart with a good chance that it won't make a new high above 222.63, the high of February the 29th. All-time high was up in the 240s. It pulled back under 160, and now it's had a very quick series of peak A, B, C, D, E, F, and that invariably says, be careful. You could have a bit of a pullback. It doesn't say a major sell signal or anything, but just a pretty sharp, sudden pullback. And you've got a peak E in the weekly chart. The peak F that was made on the 29th of February also had a couple of round numbers, and here it is in the 220 area. Here is a 213.74, starting with a dreaded H. So what's the dreaded H? That's this pattern here, which did I show it? Where it comes down sharply, has a bounce, and fails at a peak A or a peak B, and then takes out the left side low. Well, that went from peak D, had a little double top, comes down, has a rally. There's the H pattern, fails at this peak A because it took out that left side low, and it's trading at 213.60 right now, up 72 cents. Yeah. So, and the way that you've had this series of trades on a weekly basis, basically between, let's call it 219, and let's not go all the way under 200, but let's call it 200, says you're kind of trapped in this particular sideways pattern at this particular point, and that the magnet of the midpoint of the 220 to 200 area, which is about 215, we're at 213 right now. That's going to be the area that if it pops up and holds sharply above that, this is the Chicago Board of Exchange, trading at 213.60, up 72 cents. But it's starting to pull back. The 9-period moving average, the 9-period moving average is below the 14, so it turned pink in the daily, but the green weekly is still good, and the monthly is still good. So kind of a consolidation. My guess is that the 208 to 207 area will be key support if it's weak next week. Next question came in. Home Depot is up $4 at 383.94. Had an all-time non-all-time high. Had a most recent high in March of 396.87. Is trading right now 383.84. It's a leg D. That's a peak F. A leg D, probably a peak D this week in the weekly chart, and a leg C in the monthly, which gave you the arch formation that turns into a cup formation. So looking out in the year 2024, that's this year, I'm anticipating that Home Depot will make higher highs, but it's kind of consolidating right now. So I needed to check because I know that there was a question that I missed somewhere. Bitcoin. BTC is up. Did I just hit the wrong? There it goes. BTC, Bitcoin, trading up 310 at 70,520. So I drew this in yesterday, a couple of days ago. I was looking at it and I said, okay, I'm anticipating that the 74,415 high that was made in mid-March is starting to make a dreaded H pattern. I won't know. It'll be a retest in a cup formation if it's able to get, did I say 73,800? I think I did. I said if it goes to 73, it doesn't have to close there, but if it hits 73,600, that should be a move that takes you back towards the 74,415. But from the technicals, the way I'm looking at it, it looks like it's in a consolidation phase. Leg F, peak F in the weekly chart. I could call this an alternate count F/A, but that just, I'd rather say it's an F right now. I'm quite comfortable with that. I'm comfortable saying a leg C in the monthly chart. I suspect it's going to digest gains, and then later on, maybe in the summer, takes off and it goes to the 80,000 level. But at this particular point, I can't really talk about the upside potential until I've got another 2-3 weeks under my belt and I can see whether it's held 60,000, because the deeper it declines, then the greater the move to the upside has to be. So you're going to have to get a lot of technicals that don't break down over the next 2-3 weeks. But in this case, I'm suspecting that Bitcoin is GBTC. Let's go, because a lot of people won't be able to get the Bitcoin futures, but they can get GBTC, which is Bitcoin Investment Trust. This is a leg C in the monthly chart. It's actually an overlapping wave. That's a really positive aspect. I'll do a little more work on this GBTC, because if there is a pullback on the next rally, we did not get into it this time. Last time we got into it in the 12s and ran all the way to 58. Then we just stepped aside, and I spoke about getting in. Coulda, woulda, shoulda, did not do it. And look at the spectacular. I could have dived in at any point. Even now, the 9 period is green over the 40, but I think it's going to be pulling back. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, Dow's up 227.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hello, so the IAI, that's the broker-dealer index, 116.25 was the high in November of 2021. Plummets down to about 80, and it has a fabulous rally. Leg B in the weekly chart. Leg E in the monthly chart. And what was the high just 5 sessions ago? Remember, $116.25, $116.25 was the high in November of 2021. It did a little double top peak, C1, C2, comes plummeting down. And then you remember the technique that I said has become rife, become very, very frequent, where you come down very sharply and then start a rectangle with a lopsided cup formation going back to the all-time high. You can use sometimes it's not an exact time, but it is an exact price movement to the upside, but it's lopsided. And from the low that was made right here, this little double bottom low, where you went to 80.82 in June of 2022, and then 80.63 July of 2022. So we made a fractional turnaround, little what I call, this is a 2-bar reversal. Chapman wave 2-bar reversal is a good clue to say that it should be moving up. Well, it went up, and it went to what? 116.00. Remember the all-time high in November 2021 was 116.25. It goes back again to 116.00, and now it's stalling. And I suspect that I'm calling this a peak F, and I'm thinking that there's a chance I'll draw it in. I could be completely wrong because we've still got a couple of the brokerage stocks holding pretty nicely. Hood is one of them, but it's not a big weighting in the IAI. So I'm looking at this as a chance. So let me put it this way. If the semiconductors pull back early next week, not early, all of next week, if they start to make lower highs and lower lows, if the IAI, the broker, because to me this is absolutely imperative looking at the market in 2024, if we're going to go to much higher highs, this IAI, the broker dealer and security ETF, should fly to the upside. So I'm anticipating shorter term, we have a pullback, and if there's a move from 140.54 to 112.20 anytime next week, just has to tag it. It doesn't have to close there. That's just saying to me, yes, I am looking at a consolidation that should take us and test 111. So only 3 points, and it'll happen really quickly because you're looking at Schwab. Schwab, do you remember that 45 round number low? That was March of last year, was it? At 45, I had a Chapman wave. One of the techniques I developed, it's called a volume price reversal, climactic reversal, and it never has gone back to that 40. It went to 45. It never took out 45 round number low. Anyway, here it is at 71.54, and it's still holding very well. That 9, the price is way over the 9, 9's way over the 40. So all I can say is for this to really turn into not just a consolidation, but a move of great significance, that means not just a maybe 4%, even an 8% correction, but actually more consolidation, but actually a 10 to 12% pullback in the market. You have to get TLT. You have to get the broker dealer and Schwab, and we're trading at 71 under 67. That's a lot. You have to get the TLT. Oh, it's actually improving now. It's up 35 cents. So the TBT comes down, and the TLT, you want to see the exact opposite. You want to see the TBT screaming to the upside. So yields really take a toll on Toll. Toll Brothers, TOL Brothers, TOL having a high-level consolidation at 126.27. I think that Toll is going to be coming down. But if you look at Builder, look, BLDR, this is the Builder's First Source Inc. At building materials, manufacturing components, also having a very good high level at a 209 low on the day that it made an all-time high of 214.70. Now it's at 207, big deal. 7 points is full the gap. But if this starts to break under 200 in April, now you're looking at something very different. But I think to do that, you really need to see the yields. And let's just go to the 10-year yield, TNX.X. There we go. 10-year yield is down a little bit. It had made a peak D, did a double tops in the 43.50 area. Now it's at 42.16. Yeah, it's the start of a pullback. We'll see what happens. So that's why I'm saying I can't make a blanket statement to say I'm looking at everything suggesting that we just go down sharply. I'm looking at a rolling correction. And if we see these things go one at a time, then you don't have to have a universal unison pullback. It's reflective of the rotation of even short-term tops. All right, let's get back to the question. Where was it? DJT. Okay, that's the Trump something here. Trump Media and Technology Group. Why didn't you mention that? DUAC was, I think, that was something we looked at periodically, and I said, just as a trade, I'm quite prepared to look at DUAC and DWAC. That was before it became Trump Media and Technology Group. And we never did, just because it was so volatile. Even as you put a price in, could have done anything. So talk about volatile. This is tootling along at 30 in the 31 area a few sessions ago, and then it screams up to almost 80. It went to 79.88 or something, 79.90. No, 79.38 was the high, and then it had. This is not a Chapman wave Roman candle because it's not halfway. The wick has to be halfway or greater than the body of the candle, but it has the characteristic of an inverted red Chapman wave Roman candle. So the technique can apply, but it's not exactly faithful to the rules. So if at any point in the next two sessions, that includes today, it trades above 74.80, there's a real good chance it'll retest the high. So it's got already, I'm calling this an F for now. It could be an alternate count. I just don't see F could still go to a G, and then I'll have to have an alternate count. I don't see any reason to. It's just a kind of a news-related spike to the upside. It's already at a D because all it did was a name change as far as I can tell. Maybe it was always Trump Media and Technology Group. I always called it DWAC as a SPAC. So we have Charlie in Framingham. Charlie, how are you?
I'm doing well. How are you doing?
I'm doing well. So you'd like to look at...
You ready for the rainstorm tomorrow?
Oh, we got the rainstorm tomorrow. Well, it's been a very wet winter, but no snow. To me, wet is better than snow. I'll be back with Charlie. We've got a break up. Oh, you want to look at GFI, Goldfields? We'll be right back in a moment with Charlie in Framingham. And the Dow's up 253, S&P's up 17. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back and we're looking at GFI, that's Goldfields, South African gold company, trading at $15.69. It's up 27. You can see it's getting right into this area. We were in it at 14.77 on the 12th of March. Took a small loss only because I had a fairly tight stop because it had this tendency to really have sharp pullbacks, and it actually pulled back quite deeply. But let's see, March, it actually pulled back to the $14 range, which is really not a big deal because when you got a gold stock, you got to have you got to give it wiggle room. I didn't give it wiggle room. So here it is at 1567. So Charlie, are you in this?
I'm in it. I'm in at like 1370. So I've been in it, I don't know, a month. I don't know how long I've been in it, but I've got a 14% gain, and I basically want to get out at like 1570, but I think it has some room to go a little further, maybe up to 16, maybe higher.
So can I make a recommendation just in terms of looking at the weekly chart, which finally had the 9-period moving average cross positive, but you can see what I've done here, and look how well it's worked. And it's not going to work because you don't want, if you're long, you don't want this to work. There's a Chapman wave inside track repellent zone, which it went into, and that's one of the reasons why I said I can't give it too much of a room, because if it pulls back, it could go right down to the 200-period moving average of 1366. So I like it. But look how it's kind of struggling here, and it says to me that even if it has a little bit of a pop to the upside, the whole area of the 1550 to 1490 should be pretty good support. If anything, it'll be time rather than price. So I wanted to show you also the weekly chart has a much longer term inside track repellent zone. All that is I'm joining the upper wicks, which will make lower highs. I'm joining them to make a trend line, and then I add a very tiny inside track, a little parallel line. It's a little tube that I put in there, and you can see how often the price gets repelled. So as it stands right now, I don't see anything really strong in the technicals to say that it should very quickly go to 16.80, 1710. But that's the area that I think it's going to go to. So I wanted to just say to you, look, you're in at a fabulous price. I would rather say that's my core position. I'm going to have a trading position. And even the trading position, if you have enough, could be split into two parts. It's at the high right now, 1567, almost at the high of the day. You could even have just because you even just mentioned that you wanted to take something off, although you had higher targets. The way it's acting, making higher lows, not yet higher highs, the moment it takes out, doesn't even have to close, the moment it takes out the high of the 21st of March, which is at 1578, now it's starting to make higher highs and higher lows. that's not when I want to get out. That's when I want to have rather a trading stop. So here's my recommendation. I wouldn't think at this particular point, let's deal with it again next week. But right now, I don't think I'd even consider taking away your full position. I don't know if you thought of that, but I would keep the full position. On a trading position, I think of it this way. Now the trading position has a trading stop of something like $15.17. But you can say within that, I'm going to have a so that's 50 cents. I'm going to have a 30-cent trading stop right now on a tiny position, just so that I'm managing the chart. It's not managing me. And that says if it moves if it goes over the resistance line and starts to trade at 15.88, you got your trading stop and you still got your full position and you're ready to take something off immediately. That's just the way I'd look at it, because look how many times it had 3 sessions back in December. Was it December? Folks were looking at GFI. The week of the 15th, the week of the 22nd of December, and the week of the 29th. It had 3 opportunities to break that resistance level, and it couldn't, and it pulled back sharply. Then it came right back and hit that lower trend line at 15.90, the week of the 2nd of February, couldn't do it. This one actually went to the upper line, and that's a positive, and that's why I think this third week, says that if we can hold tight and have a 4th week above that green line, then all of a sudden my target becomes a left side high of 1673. So I don't think I'd mess around with it other than just say, maybe just a little trading stop on a part of the position, maybe a little lower down, you take a little bit more off, but I would keep the core position. I don't know if that helps you, but that's the way I would look at it. I would like to rebuy GFI on any move back to the 1510, 1480 area. I'll start to look at it again. And that's, if it gets repelled right now, it might be a little lower down, but if it starts to make higher highs, I might have missed it because it's acting so well, and then I'm just going to have to buy it at a higher level. So I don't know if that helps you, but that's the way I'm looking at it.
Yep, it helps to put it into perspective. It's always appreciated, Basil.
Good. And the only other thing I want you to say is that monthly chart, if at any point on a monthly basis, it actually closes in the 1650, any week, it closes in the 1650 area, that's going to help the monthly, because a downtrend line, which is the same as we're looking at here in the weekly, starts to improve. And you've got the MACD good, the stochastics weak is 64%. I'd like to see that at about 75% very soon. So I'm just giving you the bigger picture. So the major thing is, on a long-term basis, if GFI breaks 1480 and holds there for 2 out of 3 sessions, then it's probably going to come down a little bit deeper and retest the 14 level. But at this point, it's acting very well. I hope that helps you.
Yes, sir. Thank you.
Thank you. Thank you for calling. And good luck with GFI. Folks, I just wanted to go through a couple of things before I run out of time. I had it written down here. Yes. Okay, got that. Yeah, so I had a question about the VT, which is the Vanguard Total Return. I spoke about this in my webinar. Folks, that webinar was not just a webinar for the moment, it was a webinar for the next couple of months, what we're looking at, why we're looking at it. So VT is the one that is the Vanguard Total World Stock ETF, had a high of 109.30 in November of 2021. This is just like the IAI, because it went all the way down to the 76.811 in October 2022. That's where we went added another long position to our Diamonds Dow position, which we still have, even though we've got a short position on right now as a trading position. And then it went back to 110.68, the VT, Vanguard Total World Stock Return. What a beautiful move. So it says to me right here, it could be getting a little tired, and it's got the same pattern as many, and at 109.87, this is the world total stock market ETF. I'm just saying that if it starts to pull back, 108 is going to be a really important support. And if it takes that out, then I think the weekly chart says, hey, I'm having a little bit more of a pullback because it's been spectacular. Weekly charts hardly has a week before it makes a new recovery high. I'll be back in a moment. Dow's up 219.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I think I forgot to say what the GJT, the Trump Media and Technology Group, what I'm looking at. So you see this gap here from the 57, what is it? Gap. The low is 57, was the 57.25 was the low yesterday, and the high the day before was 52.80. I suspect that gap's going to be filled. If you want to talk about this, it's got a leg D at this moment, a leg D in the monthly chart as well. I suspect that this is this move to the upside is just a phenomenon because of other things that are happening, becoming a public company, etc. But most important, that's officially. Now what we're looking at is if it starts to close above this candle any day of next week, above the 52.80 was the high. If it closes below that, it's just going to be stuck. I don't think it's going to break down anything. I think it's going to be a fabulous trading vehicle if anybody's interested in it. It's just, to my eye, there are so many other things that I'd be looking at. But yeah, you could use it as a trading vehicle, but it's. I mean, I don't know what it's based on. I don't know what it's based on. So all I can say is that I probably am just going to stay away. There are other things. In other words, what was it? RDTT. We see where Reddit is trading. Reddit is down 8 today. If you want to trade something, just to have a little fun, if you get the right technique and the right opportunity, Reddit will give you a lot of opportunity. I think it's not I don't think it's a great stock as far as I can tell, but as a trading vehicle, this one is short, long, short, long. I don't know if you can short at this point. Anyway, enough with that. What I wanted to say is this: going into the end of the day, the Dow's up to there's buying coming in, but at the same time, keep your eye on the semiconductors, because buying will come into the semiconductors every once in a while today. But I think the trend is set for the shorter term. And I think we're looking at lower highs and lower lows. It's down $1.68. If the SMHs at 3 o'clock are down 225, I think the market will come back a lot more. Hey, stay tuned for Steve Rhodes is out. He recorded this show.